alongside myself is a panelist by the name of Sheikh Omar Khan, who, as you all know, is our Sharia advisor. He's a mufti and a qualified alim, well-versed in Islamic finance. And so he will be, inshallah, presenting alongside myself. And we also have our IT administrator as well as cybersecurity expert by the name of Carlos Perez. He's with Paris Technology. And he will be, inshallah, covering some of the security and safety features that we can all take advantage of in the world of investing, especially as it comes to the cryptocurrency space. So, we really are grateful for everyone who is able to attend today's session. We hope this will be beneficial for you all, and hopefully we can all learn something along the way. This is a topic that has been, gathering a lot of attention lately in the media, as well as people who have been following this space for quite some time have been curious, I'm sure. And if you're new to it, there's no worries. We'll try and explain things in a way that can hopefully help you make sense of the investment language and some of the lingo terms. We'll try and simplify them. At the same time, for those who are well versed in this space and have been following it closely, we still hope that you can also leave away with something pertinent and beneficial for you and your families. So without further ado, I'm going to dive in. And as we go, we'll allow the other presenters to get in on their time and cover some of the pointers that they have prepared. If you guys have any questions, feel free to use the Q&A section to submit those. We'll attempt to address those as we go or towards the end as time permits. So thank you all again. And I'm going to try and put my screen sharing here. And hopefully this works. One moment, I think. Every time I've done this, I will attempt to do this one more time. So Ali Radawalji again here. We're talking about Bitcoin and cryptocurrency and how we can invest in this space. But more importantly, what is this all about? And what are the features to keep in mind, qualities to keep in mind before engaging? Because learning is the most important thing. So that's what we're going to come from. So I'm just going to put these slides up one more time. Hopefully I get it this time. And I just got a new baby, a couple of days ago. We had our 6th child, so pardon me if I'm a little drowsy here. But I appreciate you all for making it. Are you all seeing a full screen, or are you seeing the 2 slides together? Do you know what is coming on? Hopefully it's just my main screen. Carlos, what do you see? Just want to make sure it's coming on properly.
2 slides.
Okay.
2 slides.
So how do I go to display settings, and then it says swap presenter view and slideshow. All right, I think this is good now, right?
Yes,
Perfect.
Perfect. Thank you all. So this is our standard disclaimers. I'm not going to bore you to death with these. You can feel free to read up on them, and you can kind of get an idea that this space does require everyone to be vigilant and careful. This is not investment advice. This is meant to be informational, and any financial advice should be discussed one-on-one with your advisor. So Bitcoin and digital assets, these are the topics we'll try and attempt to cover today. And as you know, our mission is to offer at Sharia Portfolio professionally managed investment solutions to help you and your family achieve your financial goals without compromising your personal values. We have various strategies in terms of our investment offerings. There is passive strategies that are more of a buy and hold. Then we have actively managed strategies, which can fall under either the value or the growth camp. And each of these can be tailored based on the client's specific goals and risk tolerance. And our advisory team is here to help you monitor and identify what is best for you in particular. In terms of investing in digital assets, this is a space that you want to be, as I mentioned earlier, there's a lot of jargon, but we'll try and break down some of that for you so you are able to be more familiar with this concept and the topics that are under this umbrella. Well, what is Bitcoin in particular? Bitcoin was launched in 2009. If you all remember, there was a financial crisis globally that was taking place. And part of the reasoning for launching this was to try and attempt to address the issues that were happening in the financial system. So what is it exactly? It's a decentralized currency that allows you to buy, sell, and exchange without a third party, basically. So there is no intermediary involved, like banks. And miners, you might have heard of mining, like gold has mining, Bitcoin also has mining. So what is it that miners do? Miners keep a copy of the database that shows all the transactions that are happening on the blockchain. They are also involved in securing the blockchain, and as a result of their efforts, they earn rewards in the form of fees as well as Bitcoin. Also, one important aspect that we will cover and mention a few times is that there is a fixed supply of 21 million tokens or 21 million Bitcoin, and that is what is generally causing a lot of its appeal. You can feel free to see what some of the most, what some of the most successful investors of our time, what they have to say about Bitcoin. The finite supply and the invention that has come about in the form of Bitcoin and what it represents is some of the things that stand out here. So why is Bitcoin important? One aspect, and this is, there are different reasons as to why Bitcoin can be considered an important aspect or portfolio composition of any person who's trying to build or store or preserve their wealth. But I'll cover them in different, from different angles. One of them is called Metcalfe's law, and this is basically looking at the adoption of any particular trend. For example, the internet time frame. When you all remember, there was a period, hopefully some of us do, that where internet was just taking off, and today it's kind of second nature that everyone knows what the internet is and uses that. And I think we're slowly approaching similar growth with regards to the Bitcoin and the cryptocurrency space. There is expected to be about 1 billion users by 2025 in the whole crypto space, and I think that shows the strength and the growth that's happening, because that's normally where you see things kind of ramp up quite rapidly once you hit that $1 billion mark. And the blockchain market is forecasted to grow at 86% compound annual growth rate because of the demand for securing transactions, and various industries are using it in healthcare, financial services, among others. On the right, I put a chart that somebody by the name of Timothy, he's a CFA, he shared this in 2019 when he predicted that if Bitcoin were to follow the path of how Facebook, which is now Meta, took off, it would hit $50,000 by the year 2024. And here we are at $62,000, $63,000. So clearly he nailed this. And when you look at the adoption of any given technology based on the number of users and the number of daily transactions and things of that nature that can be measured, you can clearly see where something could be headed over time. And so this is one aspect to keep in mind. Another aspect that could be appealing for some is the risk versus the reward. So if you look at different asset classes out there, and Bitcoin is now being considered a new asset class in and of itself, when compared to other categories, on the lower left is emerging markets, the S&P, bonds, and other things. On the right, you'll see that there is one outlier, and that's Bitcoin. So clearly, since 2020 at least, this has been a very strong performing asset class. In addition, if you look at it on the right-hand side, there's a chart that looks at the compound annual growth rate over the last 10 years since 2011. And Bitcoin, gold, among others, are being compared here, and the top performer has been Bitcoin over the last 10 years at least. So it's clearly showing that it has characteristics that investors can appreciate. There is a lot of risk, as you can see. These large drawdowns like 2014, 2018, 2022 was a rough year, as you all recall, just a couple years back. But those who are able to stomach the volatility are clearly achieving some very good returns. And so I think that's worth keeping in mind. The other reason why Bitcoin is being representing a category that people should pay attention to is because cash and treasury bills are, a lot of people say, well, they don't lose value. If I give $100 in my bank account today, it likely stay $100 even 3 years from now. True, $100 will be $100, but what you will also realize is that in the price of that, or the value of that $100 is going to decline because fiat currencies debase a lot of times. Pretty much every fiat currency in the world, not just the US dollar, has declined in value, and a lot of that has to do with the debt issuance that takes place. The debt, and we'll cover debt in a little bit as well in future slides, but this is one thing that we all have to be mindful of, is that yes, you may hold something that does not change on a surface level. It appears to be the same, but in reality, you and I know that $100 3 years ago is not the same today. So that's why holding something that is decreasing in value is something that we do not want to be necessarily doing blindly. If you're doing it, knowingly that yes, I want to hold some cash because there's a reason for me to be holding some cash and it makes sense, then that's fine. But if you're holding too much cash, just know that you're losing purchasing power, just like the melting ice. Another reason that you can clearly see is in 2016, a home, in fiat terms was 288,000. In 2024, it's now 434,000. In the same time frame, in 2016, you would have needed about 664 Bitcoin to own that property. And this is just, an average median, priced home in the US. And in 2024, all of a sudden, you only need 6 Bitcoin. So that's a drastic change. And you can clearly see that Bitcoin has been holding its value over time. And if someone was holding dollars, clearly that 288,000 would not be sufficient today to get you even a median-sized home. So and this is just a span of 8 years. So clearly, inflation also, according to this right-hand chart, as measured by Trueflation, shows that between 2020 January and March, end of March, just pretty much last month here, was compound inflation rate was 24%. So $100 would be worth basically $75 in today's terms in about 3 years. So inflation is definitely causing pain for a lot of people, and that's why we want to raise awareness and help everyone be in the loop on what are some ways to protect yourself. I mentioned earlier that global currencies all have declined against Bitcoin. So against the dollar, yes, they have declined, and the dollar has had strength, relatively speaking, against other currencies. But even the dollar against Bitcoin has been declining over time. So that's a trend that we definitely want to keep an eye out for. And what is the reasoning for currencies to decline in value? And we'll talk about that as well. One reason is the debt, right? So, US just a few weeks ago announced another increase in the debt by about $1.2 trillion. Currently, we're seeing over 7 trillion in treasuries that have been issued for the entire of 2023. We also have seen that the federal debt is increasing by $1 trillion every 100 days or so. So, the debt is increasing, and GDP is not necessarily increasing as rapidly. So, usually there's a measure of debt to the GDP, and if a country or a sovereign has a debt to GDP over 77%, then they cannot. This is a research that was done by some of the professors, I believe, at North Carolina University, and they came across with the conclusion that if your debt to GDP exceeds 77%, you cannot pay back that debt unless there is, that's basically the point of no return. And most Western civilization countries, Europe included, are at debt to GDPs north of 100%. The US, I know, is much higher as well. Japan and others kind of in much more of a rough situation there. So debt is causing problems. We've, also seen that there is war happening. A lot of people are concerned about what's happening in the Middle East. And one of the ways that has been cited that you can protect yourself is to exchange fiat currency, no matter which currency you're holding, for Bitcoin as a way to vote against war. So this is one of the macro folks out there representing this or sharing this thing. And a lot of times when there is no hard cap on money, because money is needed to fund different expenses. As you can see, the defense budget of the US here, which I just shared, this was earlier from today actually, or maybe yesterday. I just pulled this from the US debt figures, and the US defense budget is $881 million. So clearly there is a lot that is being spent in defense, as well as the interest that is being spent. So if you want to limit what the government does with your money, one way to limit that is to not transact as much in that. So if the government, the problem is the government prints too much money, and the more that we live under these kinds of situations where the government is left unchecked, then we're basically the government is getting the green light to keep financing wars. And Saifuddin Ammous, he has authored a book, the Bitcoin Standard, and he wrote this book quite a while back, but he's basically suggested that those who are able to limit the amount of money in circulation, that's going to limit the war. And so in the past, gold used to be what currencies were backed off of, but that went away during the Nixon timeframe. And once that went away, that started to pave the way for dollars to not be backed by anything. And that means governments kind of started printing more, to support all of their spending. And that's a problem, clearly. So one way is to prevent wars, why Bitcoin is seen as a positive thing against that type of situation. Also, the fixed supply, I mentioned there's 21 million coins that will ever be mined between now and the year 2100 or so, 2140. There's only 1.4 million Bitcoin that will ever be mined. So it gives you an idea that the supply we're at the point where the supply is not going to go up much, because most of it has already been mined. On the other hand, dollars or other currencies which are not generally backed by anything the supply just keeps increasing. And so this is why it's important to, again, keep in mind being on the train with those characteristics that are hard, and Bitcoin is seen as one of the hard assets with a fixed supply. And so it presents characteristics that people might aspire towards. There's a supply crunch about to kick in. We've already been seeing signs of that. The balances on the exchanges, such as Coinbase, among others, are declining. At the same time, long-term holders are not necessarily selling their Bitcoin. So when you have a situation where most of the Bitcoin that has already been issued is held by long-term holders, and the supply on the exchanges is declining, that usually points to the direction of the price increasing. So that's just basic supply and demand one-on-one economics. What we've also seen over the past 96 days or so since Bitcoin ETFs launched, there has definitely been bleeding from GBTC. GBTC is the red bar, blocks that you're seeing on the right here. And they have consistently been selling for whatever reason. Some of it due to making whole some of those that went through some bankruptcies on Gemini or and DCG and others. So they were forced to sell some of that, and we believe that some of that it may be slowing down now. But nevertheless, at the beginning of the year they had about 600,000 Bitcoin. They've lost already 300,000. So even if the bleeding continues for another month or two, they're going to be out of Bitcoin on there. At the same time, the Bitcoin ETFs, the green, are accumulating very aggressively. The buying is consistent, especially the BlackRock IBIT. You can see on the left, they have been stacking a lot. And in comparison, that is all that has been mined in the last 96 days was about 86,000 Bitcoin. So you can see that 531,000 is being sucked in from a supply of only 86,000. And in a couple of days, Saturday, I believe, is the date of the next Bitcoin halving. Every 4 years, the protocol adjusts to where the reward is cut in half. So currently, 900 Bitcoin are being mined per day. In a couple of days, that's going to drop to 450. So you can imagine if the demand continues even at the current pace, when the supply is getting cut in half, that should be a situation where we haven't seen how much more money is expected to come in, but if the trend continues, that could be very, very interesting on the price action. A lot of people have compared gold to Bitcoin. Gold in 2012, or was it in 2000? Yeah, when the first Bitcoin ETFs in 2004, it was introduced, and it took 8 years for the price to increase, and that's what's shown on the lower right. And apologies, I know I've tried to jam too many too many images in some of the slides, but if you look on the lower right, gold was approved in 2004. For 8 straight years, the price went up. So far, since Bitcoin ETFs launched, we've seen some drawdowns in gold, although gold is still in demand because central governments are still, buying a lot of gold. Like China is one of those that's doing that. But against Bitcoin, Bitcoin is still increasing much more in value, and this is why it's seen as digital gold. So I think both have characteristics that investors or people trying to store money in a way that is holding their value over time might find both important. But clearly, we're seeing much more money flowing into Bitcoin, and Bitcoin is clearly making another all-time high against gold, despite gold's strength more recently. I mentioned the 4-year cycle, and we're about to hit that crunch, and then the 420, April 20th is where that halving kicks in. And historically, this is what happens with the price. So I'm not a fortune teller, but considering the effect of the halving, we can see that price tends to generally go up during these cycles. And the main difference this time is that not only is the supply coming down, the demand is much more than we've ever seen before, because institutions are definitely a big part of the money that's coming in. And institutions generally have a lot more purchasing power. The BlackRocks, Fidelities, and others, which are managing roughly $27 to $30 trillion in money, you can just do some simple math and just get an idea of what if they were to allocate even 0.1% of their money into this space. That would be a significant chunk coming into the space, and that should be enough to cause the price to run quite aggressively. So again, the Bitcoin halving, what is that exactly? As I mentioned, there are different epochs. So there was, the different halvings that have taken place. Each block, generates a certain amount based on the schedule, and you can see that the decline is, the trend is declining on the left-hand side, and we've seen the rallies that tend to happen post-halving. So, 420, as I've circled that as our thing. This chart was created well ahead of time, before the 35,448 price. You can see even before the halving, we're at 63,000. That shows the unprecedented demand that we're seeing. Hong Kong has now also approved around 10 or 12 ETFs. So we not only have the US side, getting in on this space, Hong Kong and China. And China has had a rough time with their real estate space. I know a few years ago, you guys heard about the Evergrande crisis, but they've had much more challenges on the real estate front. Their stocks have also not done as well. And so a lot of those investors and people are, in that country are looking for alternative places to park their money. And we believe Bitcoin could be one of the areas that they do come towards. And some of those ETFs are about to get approved pretty soon here. So, you can imagine when all of these ETFs are participating, in addition to sovereign states that may not be necessarily, letting everyone know that they're doing this, and individual investors, I think that we're about to enter some FOMO times, from what I'm seeing. Clearly the peak is not in based on history and based on prior cycles. So I think despite the price coming from 15,000 or 16,000 where he was not too long ago to 64, 63,000, there's still quite a long way to go in this cycle. And so, we will wait to see what happens, but, we're still in the early stages not necessarily the bull market began, but this is like, the second stage maybe of the bull cycle. So what are the different ways that people can get on the train? One is direct buy via the cryptocurrency exchange like Coinbase. And we'll talk about the pros and cons of doing it through that. One of them, of course, is, if you're comfortable with self-custody, or if you're comfortable with dealing with buying and selling on your own, then you can definitely do it through that. You can buy the Bitcoin ETFs, and I know Sheikh Umar will mention a little bit of this in his, so I'm not going to cover too much on that. Or you can own proxies. Now, the proxies tend to be much more volatile and riskier. Miners, for example, today CleanSpark clearly, in anticipation of the webinar, decided to turn green. So CleanSpark is leading the miners today. I know it's been weak for the last 3-4 weeks, but that's generally how the miners operate. They're higher beta to the actual commodity itself. So if Bitcoin goes up 5%, sometimes you'll see the miners shoot up, 15, 20, 30%. But on the flip side, if Bitcoin drops 5, 10%, the drawdowns tend to be higher. So you want to be mindful of the risk in the mining space. And it's a cutthroat business because the reward is getting cut in half for these miners. There's a lot of competition. So you want to, if you do decide to allocate to any of the miners, you want to be mindful of what is the most efficient miners with least amount of debt and, good efficiency matrix, those types of things are the things you want to keep an eye out for. The other way that has been cited is through MicroStrategy. MicroStrategy in 2020, they began adopting a Bitcoin strategy whereby they would accumulate and buy Bitcoin by either increasing their share count or borrowing, and that has actually worked out quite well for them. It is another very volatile stock, so again, be mindful of that. But this clearly shows in comparison with gold, silver, or bonds, or even the S&P, Bitcoin has done quite well. So, with everything, do your research, have a plan. If you need to work with an advisor, talk to an advisor, figure out what works for you. Look for the red flags early. Don't get sucked up in the hype because there's a lot of crazy things in the crypto space. I believe there's 98 or 99% of things that are junk. You want to be in the top assets, and for that you have to do research and also get in early, and use the resources that are available. And also, of course, just like with everything, you want to be mindful of Sharia compliance. And I'll let Sheikh Umar cover that in his slides. If you are considering other use cases outside of Bitcoin, these are some of the characteristics you want to keep in mind. How much inflation does that token carry? Because there's a lot of tokens that constantly the supply is increasing. They keep dumping on the retail, and lining the pockets of the founders. So or the VCs that are supporting those. So be very careful about those things. But more importantly, try and understand, what is it trying to solve? Is it really there's a purpose behind this, or are they just trying to get in, because there is a hype and not really solve any good use case? And these are some of the metrics that I mentioned earlier that are worth looking into when examining one chain against the other, so what are the characteristics that stand out. So yeah, I think I have covered what I felt was important. I know this is an introductory topic. There's a lot more that can be said, but for us to cover the baseline information, because people have been interested, they've been curious, they've been asking. We wanted to offer something, inshallah, helpful and beneficial. And we hope that if this is something that you guys are benefiting from, and there's more follow-ups, we can always plan for something in the future as well. But we'll turn it to Sheikh Umar Khan, who is grateful for his expertise and insight, and he can cover us into the next phase of our discussion, which is the Sharia compliance. Thank you so much, Sheikh. If you want to screen share, I can let you screen share. Otherwise, I can move whatever you prefer.
Yeah, if you don't mind flipping the slides, I think that might
Sure,
be easier
no
this
problem.
way. Okay. Bismillah walhamdulillah wassalatu wassalamu ala rasulillah wa ala alihi wa sahbihi wa man wala. Assalamu alaikum, everybody. So just to get into the Sharia compliance aspect, and since we've been talking about Bitcoin, but before we talk about Bitcoin, Bitcoin, of course, is part of a larger category of assets known as cryptocurrencies, and cryptocurrencies themselves are part of a larger category of assets known as crypto assets. So I just want to make sure we're going to zoom in on a scope here. We're not talking about other types of crypto assets, like whether they be NFTs, whether they be security tokens, utility tokens, governance tokens. There's a variety of different crypto assets that exist that make use of blockchains and other technology that's underlying Bitcoin and other cryptocurrencies, but we're kind of focusing on cryptocurrency specifically. So if you can go to the next slide, please. Yeah, so the first thing to share with cryptocurrencies, unlike stocks, where we have a variety of different organizations and global standards available, like AOFI is maybe the most well-known standard globally for stock screening to figure out which stocks are halal, which ones are not. And AOFI is the accounting and auditing organization for Islamic finance institutions. So it's got many well-known senior scholars and worldwide experts in Islamic finance, people like Mufti Taqi Uthmani and others. Then we have MSCI, FTSE, S&P. I don't know why I put S&P twice there. ISRA. There's a variety of different organizations that exist that have created standards for screening stocks, and they all have very similar criteria for stock screening. So ISRA, for example, is the International Sharia Research Academy based out of Malaysia, and then the SAC is the Sharia Advisory Council of the Securities Commission in Malaysia as well. So Malaysia's been at the sort of the cutting edge, bleeding edge of Islamic finance in many ways. So a lot of these organizations, they do stock screening and they have standards for that. Unlike that, we do not have a Sharia standard, a global standard or a Fiqh Council standard that has been created for cryptocurrencies, which really means that we're relying upon individual scholars. And there have been some fatwas passed as a part of a few fiqh organizations, but there's not like a global standard as such. So if you can go to the next slide, the next animation. And so, like I said, the first question we need to ask is, before we get into Bitcoin and before we get into screening standards, is the concept of cryptocurrency itself even halal? Because you may have heard and you may have seen across the board that there are some opinions where people say cryptocurrency itself is not halal. In fact, some current countries have declared that cryptocurrency is not halal for reasons that they have. And before we get into that, I want to talk about what is cryptocurrency. So I'm not going to go into, yeah, move back. Just move back. Yeah, there we go. No, one forward. Yeah. So next one. Yeah. So what is cryptocurrency? I'm not going to go through what Ali Rada went through and explain, what is cryptocurrency and blockchain and all of that. I'm talking about it from an Islamic perspective because we need to figure out, before we declare it halal, haram, whatever, we need to figure out what is it. So the first opinion that exists is that cryptocurrency it's an asset. It's not a currency. The name might say it's currency, but just because something's named something doesn't mean it is that thing, right? So if somebody named me a horse, I don't become a horse. I'm still a human being. So one opinion is that actually cryptocurrency is an asset and it needs to be treated like an asset. And there's a variety of different reasons why people have come to this opinion. They talk about how like the currency is not in widespread use yet, and there's a lot of other issues. Some of them I'll address in a future slide. A second opinion is that it is an asset. Okay, so the first opinion is it's not an asset, it's not a currency. The second opinion is It is not a currency, but it is an asset. And the third opinion is it is a currency, not an asset. And why do we care about these details? It's important because we all understand that Islam is against this concept of riba being interest. So I'm allowed to rent out my house, right? I can give you my house on rent and I can charge you $2,000 of rent for it on a monthly basis. It's not an issue. I'm allowed to rent out my car. I'm allowed to rent out my other assets, but I'm not allowed to rent you my money. So I can't give you $1,000 in cash and say, give it back to me in a year. In the meantime, pay me rent on it at, $50 a month. I'm not allowed to do that. So it's not just a technical debate to just to classify it and give it a name. This has major consequences in how we treat cryptocurrency. Do we treat it like money or do we treat it like assets? Is it going to, if I give it to somebody and I charge them a rent on it, is that going to be a problem? Is it not going to be a problem? And this gets into a lot of fundamentals of economics of what is money. And if you go through the economics textbooks, if you go through all of what the Islamic scholars have also written about it throughout time, so whether you look at it from a conventional perspective or you look at it from an Islamic perspective, money is defined as a few different ways. So people say money is a medium of exchange. You use it to buy other things, right? Money itself is not a goal. And this is very Islamic, by the way. Money is a means to get to other things. So that's why even in Islam, we're encouraged, if you have money, don't keep it as cash. And I've talked about this in previous webinars, either spend it or give it away in charity or invest with it, right? And that's why we're here to talk about investments. We're here to talk about what do you do with that money. Money itself is not the goal, it's just a means. And we shouldn't just be sitting on money, we should be putting it to productive use. This is also why zakah is paid on excess money that you have, because you're supposed to be putting it to use by investing it, by spending it, by giving it in charity, doing something with it. So this is kind of the common definition of money. Money is also used as a unit of accounting and a store of value, but most importantly, it's a medium of exchange. Let's go to the next slide, please. So what is our view? I'm not going to go into all of the details. Our view is that money is a currency. And there's a few different reasons for this. And by the way, when I give these reasons, this is not just my own view. This is a view. I actually presented this at the conference that the Assembly of Muslim Jurists of America, AMJA, they had a conference in 2022. There were three of us that presented on cryptocurrency, myself, Dr. Jamal Zarabozo, and Dr. Abdul Bari Mash'al. And all three of us actually worked on this independently. We did our own research, we wrote our own white papers, and we all three presented at the conference. And interestingly enough, all three of us had exactly the same view on how to look at Bitcoin. So the first reason is if you just look at, you look at its name and you look at its purpose of creation. So Satoshi Nakamoto, who was the inventor of Bitcoin, which was the first cryptocurrency, he wrote a white paper. The white paper was titled Electronic Cash System. Okay. So that's not just in the name, but this is the name that was penned by the author. And in the paper, he talks about how Bitcoin can be used for online payments, for peer-to-peer transfers, without needing financial institutions to serve as a mediator. So he described all of these different functions that are all a medium of exchange function of money. So he was describing basically what is money. Next bullet point, please. Also, if you look at the definition of cryptocurrency anywhere that you find it, for example, Wikipedia, it says that cryptocurrency is designed to work as a medium of exchange. PricewaterhouseCoopers on their website, they say cryptocurrency is a medium of exchange. And the same is true in many definitions that you will find by the experts in this area. Next bullet point, please. And then most importantly, although it is not a widespread use, in widespread use yet, cryptocurrencies can and are used to purchase goods and services. So for some time there, I know you could buy a Tesla with cryptocurrency. I don't know if that's still the case. I believe you can still buy pizza in certain New York pizza joints with cryptocurrency. And there's many other uses of cryptocurrency as well. Now, some people have argued that cryptocurrencies are not cryptocurrencies. They're not really currencies because they're used more for trading and speculation than they are as a medium of exchange. Okay, that is definitely true, that cryptocurrencies are more used for trading and speculation than they are as a medium of exchange. But the same is true for fiat currencies. If you look at the foreign exchange market for government-backed fiat currencies, you will see that they have a daily volume of $6.6 trillion. That's more than even the stock market. So even the government-backed currencies that we use suffer from this problem. We don't use that to say, oh, they're not currencies anymore. They're still currencies. Another argument people use is they say that because of the amount of trading that's going on, and it's so much more than the actual use of the currency as a currency, because of that, there's so much volatility, and the volatility means there's no stable exchange rate and there's no stable value of this cryptocurrency. Therefore, it's not a currency. Well, again, there are many currencies that have gone through this types of volatility, that have been through devaluation, that have been through all kinds of issues. We don't stop calling them currencies for this reason. A third argument that I've seen that people have used, they say this is not a currency, is because the value of Bitcoin or Ethereum or whatever is actually pegged against the US dollar. It doesn't have its own value. No one's measuring value against it. People are only measuring value against the US dollar. Again, this is not a great argument. There are many currencies around the globe: the Bahraini dinar, the Hong Kong dollar, the Qatari riyal, even the Saudi riyal. All of these are pegged against the dollar. It doesn't make them not currencies. So anyway, the conclusion that I've come to, the conclusion that my peers at the AMJA conference came to, all of us say cryptocurrency is a currency. So now having established that, let's move on and talk about what that means. So now that it's a currency, I already mentioned that we don't have a global standard for evaluating cryptocurrencies. And one of the problems with cryptocurrencies is that there have been many cryptocurrencies, literally tens of thousands of cryptocurrencies that have come about because of the hype in cryptocurrencies. And as a result of that, there's been a lot of fraud. There's been a lot of issues. They're not government backed. They're not government regulated. They are government taxed, but they're not regulated. And there's been a lot of fraud, a lot of pump and dump schemes. And so it requires that we do some amount of due diligence. And you can think about this as you could say this is an Islamic perspective. You could say this is an ethical perspective, or you could just argue this is just a wise thing to do. Anytime you make an investment, Islamically speaking, ethically speaking, or just wisely speaking, you should be making sure you've done some due diligence in that investment, right? And the Prophet ﷺ is reported to have said that Allah does not like it when people waste money, right? And so we should not be wasting money. We should be doing due diligence. So as a part of this due diligence, a scholar of cryptocurrency, someone who's an Islamic scholar, who's hopefully versed on both sides. They've looked at the ethics of cryptocurrencies. They've looked at also the the technical details behind cryptocurrencies. They can look at a currency and they can kind of screen it. Before we were doing even like a Sharia screen, this is more like a, hey, does this seem like a fair and reasonable currency? So if you can go ahead and bring that up. So the first thing you want to look at is it a reasonable store of value? And is it a reasonable medium of exchange? Is the coin that you're looking at going to hold its value for the owner? And will you be able to use it to buy and sell something? Otherwise, it doesn't quite classify as a cryptocurrency. The next item that you want to look at is, does it have some sort of Ponzi-esque economics? Okay. So a lot of cryptocurrencies have come about, which are basically just Ponzi schemes. Okay. And when somebody buys those currencies, they are making money not for themselves, but for the person that they bought it from, and potentially from the person they're buying it, they're selling it to. But somebody in the end is going to be left holding the bag, and they're not going to be making money. So you have to do some screening there. Third, you want to make sure it's a real world permissible use case. It's not just a fictitious currency that's created, which has no utility, no value, because in Islam, you're not allowed to buy and sell things that don't have value. In fact, the reason you can't even buy and sell alcohol is because alcohol is deemed to have no value. It's for drinking purposes. You can't buy and sell it because it has no financial value associated with it. So you have to make sure that there's some permissible need for it and some value associated with that. The fourth thing you want to look at is that it's not susceptible to manipulation. This is similar to number two, where you're trying to make sure there's not a Ponzi-esque tokenomics associated with that, is you want to make sure that the supply of the coin cannot easily be changed by the creator. Because Bitcoin obviously doesn't have this problem, but sometimes you will find these cryptocurrencies where they have a finite supply, but then the creator has the ability to suddenly increase the supply, which of course will devalue that currency. The fifth thing you want to look at, and this is now starting to get much more technical, is the consensus mechanism. Is it proof of work based? Is it proof of stake based? You need to kind of look at the underlying mechanism to see, is it halal or not halal? And this gets very technical. And the last thing you look at is a whole long list of qualitative standards, which I didn't want to get into. But you're starting to look at kind of like ESG scores, or kind of like when you're evaluating the management of a company when you're looking at purchasing their stock. You're trying to see, are there technology documents and strategy documents easily accessible and published? Do they have a reasonable brand in the market? Do they have a robust business model? Do they have good governance? Do they have some competitive advantages? So there's a variety of different things that you might look at before you screen as you're screening this cryptocurrency. Now, just to go back to Bitcoin, Bitcoin itself passes all of these tests. Okay, so there's no problem with Bitcoin's store of value, medium of exchange. There's no Ponzi schemes built in there. There are real world use cases. It's not susceptible to manipulation because of all the technical mechanisms behind it. The consensus mechanism is solid, and qualitatively, it is, you know, it is the highest standard. I was going to say it's the gold standard. It has pretty much replaced the gold standard in that sense, right? It is it provides one of the highest standards. It's one of the originals, and also just one of the most tested and looked into currencies, whether it comes to the security aspects of it, the governance aspects to it, however you might want to look at it. We can go to the next slide. So now that we've decided that, okay, number one, cryptocurrencies have to go through the screen. We've talked about that screen. We've talked about Bitcoin living up to that standard. We've talked about the fact that we've decided that it's a currency. So now that we've decided it's a currency, what does it mean that it's a currency? So as a consequence, Bitcoin should be treated basically the same way as you would treat other types of currency. So I should treat it the same way I would treat a rial, a dollar, a US dollar, a Hong Kong dollar. I should look at it exactly the same way, right? So we already know what that means from a basic perspective. It is halal to acquire this type of currency, right? It's absolutely halal to earn a dollar, and it's halal to earn a rial. It's halal to earn a Hong Kong dollar. So just like that, it is halal to earn or obtain in other ways or purchase and go ahead and acquire this types of currency. If you can, Ali, if you can go ahead with the bullet points as I read through them. Secondly, it is halal to purchase things with them, right? Just like we use currency, we go out to the market, we go to the store, we buy items, we sell items. It is completely fine to do that. It is also halal to use currency as a store of value. What does it mean to, it's a technical term that just basically means you can keep money under your mattress. You can keep money in a box in your closet. You can keep money in a bank account. You can keep money in your wallet. And so there's a variety of different ways that you can store value, as in you've earned some money or through trading, investing, through a job, through whatever means, and you've taken this money and now you want to store it, right? You don't want to store, for example, your money, your wealth as apples, because the apples are gonna, they're gonna go bad over time. So you don't want to necessarily keep it in a car, because the car is going to lose value over time. Again, it depends on the car that you have. Certain sports cars will go up in value over time. But generally, you want to keep it in something that's going to maintain value. So is it permissible to store your money into Bitcoin? Yeah, sure, absolutely. It's permissible to do that. It's halal to use it for money transfers. I want to transfer money to somebody, I can transfer it as Bitcoin, no problem. The question becomes, how about investing in it? Okay. And so this becomes a little bit tricky, because when you look at currencies, let's talk about currency and how scholars have historically viewed money itself. So Ibn Taymiyyah said very clearly that the objective of money is not to acquire money for its own sake, but rather as a means. I mentioned this earlier. And then he continues, and the exact quote from him, he says, when it is traded with itself, with the intention of investment or profit, that goes against the very purpose of money. So I think the point I'm trying to make is, if you take US dollars and you trade it for Bitcoin, for example, and you're doing it with the intention of investing in it, how is that really an investment? Because you're just trading one kind of money for another type of money. Similarly, Mufti Taqi Uthmani, he says, money has no intrinsic utility. It is only a medium of exchange. And then he continues on to say, currencies are a medium of exchange, and to make them a tradable commodity for profit earning goes against the philosophy of Islamic economics. Similarly, even Mufti Faraz Adam, who talks about cryptocurrencies a lot, he says, investing in Bitcoin does not benefit the society nor the real economy. Bitcoin investments do not boost services, nor do they boost labor, nor do they increase the production of goods. And when we're trying to invest in something from an Islamic perspective, we're trying to provide some benefit to the economy, and at the macro level, the micro level, to individuals, to society as a whole. So when I invest in a company that's producing a product, that product will benefit the world. When I'm investing in a company that's providing services, those services should benefit the world. Okay, so can you really be investing in Bitcoin The perspective that I bring, and actually all of the scholars at Amgen brought as well, is that no, you're not investing in Bitcoin. Okay, but what does that mean, Sheikh Omar? Like, what can you do with Bitcoin? Can I not have it as a part of my portfolio? No, I want to make a distinction. There's a difference between putting money into Bitcoin because you're saying, hey, I'm changing from one type of money to another type of money because I think it will go up in value. Okay. Now, there's no natural reason why that other money should go up in value. It's just money. It's more naturally a store of value than it is. But Ali Reza went through a whole bunch of reasons why Bitcoin might maintain value or increase in value against the dollar because of all of the issues that are going on. He talked about macroeconomics, he talked about the debt, he talked about inflation, he talked about the supply of money. There's a variety of different things that he talked about. So if you're trying to protect your wealth, if you're trying to preserve your purchasing power and you would like to store it in a good medium, right? You're sitting here thinking about, should I put it in US dollars? Should I put it in gold? Should I put it in other types of assets? Or should I put it in Bitcoin? That might be a question that you ask. And you say, if you feel that Bitcoin is going to be a good way for you to protect your value and not lose that value over time, there's no problem with that. So there's no problem with including Bitcoin in your portfolio, whether it is to store value, whether it is because you want to hedge against the dollar because you're very bearish on the dollar. I'm personally quite bearish on the dollar. Given everything that's going on, the debt has become absolutely crazy and unsustainable, and there's no signs of it slowing down in terms of the increase that the government keeps driving. So from that perspective, yes, there's no problem with including Bitcoin in your portfolio, using it as a measure of as a store of value and as a hedge. Okay, and that's basically what I'm trying to say is don't think about it as you do with your stocks, where I'm investing in something that's a productive economic investment. There's a difference between a financial investment and economic investment. And don't look at it as, hey, I'm going to put my money into a company that money is going to deliver products and services which benefit the micro and macro economy, because putting money into Bitcoin isn't actually benefiting the economy. What it's doing is it's allowing you to maintain your purchasing power and wealth and all of that. Okay. So if you are going to include Bitcoin in your portfolio, some things to think about. Number one, again, like Ali Rada mentioned, you can purchase it directly using a service like Coinbase. It is a little bit more complicated, a little bit more technical. You need to know what you're doing. Depending on how technical you are, you might also be able to take that money offline and move it to a USB stick. There's a variety of different ways of doing that. You can also make use of, there's a number of new ETFs that have come out in the last few months where you can use one of these ETFs. And these ETFs actually purchase Bitcoin for you, right? So they will purchase the Bitcoin, they will hold on to the Bitcoin, and they just make it much easier for you to not have to deal with the Bitcoin directly because you can just go into your regular stock trading account and buy the ETF, and the ETF is buying the Bitcoin for you. So they're just acting as a middleman, doing that work for you so you don't have to hold the cryptocurrency itself. That's okay to do as long as the ETF itself is purchasing Bitcoin. What's not okay to do is some of the ETFs that you invest in, they don't actually purchase Bitcoin. So if you can go to that part, yeah. So there are some ETFs that are just tracking the value of Bitcoin. They're tracking the value, but they're not actually purchasing the Bitcoin. That's not okay to do because you're just playing with paper money. You're not actually holding on to the actual currency, and that becomes a problem. Something else that's not allowed is you need to make sure as you're trading or investing or whatever you're doing with your currency is to make sure that you're not purchasing what's known as contracts for differences. Contracts for differences are these contracts that you sign where you say, hey, look, I'm not actually going to buy that item, but if that item goes up $10 in value, right, give me that $10. So you don't actually buy it. You're just signing a contract saying, if it goes up $10 in value, give me the $10. If it goes down $10 in value, I'll give you $10, but you're not actually buying or selling anything. It's really akin to gambling. Like you're sitting there and saying, if it goes up this much, I'll give you this much. So contracts for differences are not permissible at all. So tracking ETFs would not be permissible at all. This is true for stock ETFs as well. Contracts for differences also not permissible. Again, this is also true for stocks as well. And then you should not be purchasing derivatives, any types of options, any types of futures, anything that where you're not actually buying the real currency, but you're making bets about the future value of the currency, or you're doing some sort of risk transfer based on how the currency value goes up or down. These are all things that are not allowed in the stock market as well, and they're not allowed with cryptocurrency as well. But you can go ahead and buy directly, or you can go ahead and purchase one of the 11 ETFs. And I think that's the end of my section. So jazakumullah khairan. Subhanakallah wa bihamdik. Ashhadu an la ilaha illa ant. Astaghfiruka wa atubu ilayk. Assalamu alaikum.
Thank you, Sheikh Umar, for that color in the Sharia compliance side so that we all kind of are aware of how to engage with this space if we are to do it in a manner that is in accordance with our values. At this point, I just want to make sure we get a few minutes in with Carlos Perez, who will cover some of the tips regarding safety, security, how to make sure you're doing things in a way that is protecting yourself, because there's a lot of hacking, there's a lot of crazy things out there in that space, because a lot of people who don't know what they're doing, they will get wiped out, they will get burned, and we want to make sure we're doing things in a smart and smart way. So let's turn it to Carlos, who can cover some of these points with us, and then we'll try and attempt to address any questions at the end.
Great. Thank you, Ali Reda, for having me. And thank you so much, Sharia Portfolio, for giving me the opportunity to chat about this topic. My name is Carlos Perez. I'm a cybersecurity expert and primarily focus on protecting businesses and particularly with companies that are in the investment space like Sharia Portfolio, ensuring compliance. As far as Bitcoin is concerned and a lot of the cryptocurrencies, I think a lot of the information that has been shared has been phenomenal. It's a very complex space, I would say. When it comes to security, really maintaining and holding your own crypto can be significantly complicated, and it can be a very, very technical endeavor, and it can also be a little intimidating for a lot of folks, which is why I think that the new Bitcoin ETF and a lot of these ETFs are actually very favorable, because they remove the need for you to actually manage and hold the custody of your own assets when it comes to cryptocurrency. And I think that can be very valuable to the masses, as well as providing some very, very beneficial aspects from a regulatory standpoint, as we've seen that there are organizations that known as exchanges that have existed recently, Coinbase being one of them. Some of you, I'm sure, have read in the news about some of them who have not done well and maybe gone under. They did hold crypto assets for different organizations and different people, but really having custody of your crypto is incredibly important. With the ETFs, there are regulatory standards that the ETFs have to meet, which the Sharia Portfolio team is very familiar with, and those regulatory standards are really, really important in protecting the customers and the people that are actually using and holding cryptocurrencies, or holding the ETFs, or holding cryptocurrency via the ETFs. So there are several different ways to custody your own crypto. There's cold wallets versus hot wallets. You've probably heard these terms communicated in one of two ways if you're really in the industry. Cold wallets are not really connected to the internet and offer higher levels of security, and that's just simply by not being accessible, right? Hot wallets are connected to the internet. They're more convenient. Typically, one would keep lower levels of cryptocurrency in hot wallets, as those are used more for day-to-day trading, transacting. But they are less secure, as there is significant more online exposure that can create an issue. So really, you only want to keep amounts that you need for short-term trades or payments in hot wallets in any given at any given moment. The single biggest thing to understand that I would like for any of you to take away from this is not your keys, not your crypto. Every wallet that is in the blockchain has a set of keys. Your keys are your keys to your crypto. If you have access to your keys, it is your crypto. If you do not have your keys, it is not your crypto. So your keys are incredibly important when it comes to your wallets, and making sure that no one has access to them. Try and keep them off of digital platforms if you can. Try and make sure that that there's more than one person. For instance, if you and your wife have access to them, that they both understand, that you both understand exactly how to access them, where your keys are kept, preferably somewhere that's safe but away from the digital space. I think it's very, very beneficial to be able to do. So always keep that in mind, not your keys, not your crypto. With exchanges, it was very much not your keys, not your crypto, but exchanges kind of stayed away from a lot of the regulatory mandates that you will see with the ETFs that are being introduced now. And a lot of these exchanges really played in a gray area, and that gray area allowed for space and different things to happen that one would not want to happen. But when it comes to these ETFs, there are regulatory standards around them. So although there are going to be opportunities for those to be they'll be a little bit more expensive, as there is, of course, middlemen. They're significantly more favorable than saying keeping them in an exchange. If you do not feel comfortable managing your own wallets, please do not do so. That would be my takeaway. Next slide. So good security practices, regardless of number of wallets and prioritize security practices. Use strong, unique passwords for hardware wallets like Ledger. Ledger is a very reputable hardware wallet that is in existence, and that will help you maintain your assets, hold on to your assets, and be able to use them. Again, make sure you have backups for your seed phrases. It's very, very important that you keep them secure, that you keep them out of the internet. You do not share them by email. Think of them as something highly private, as your access to your bank account PIN, your debit cards, your investment accounts. You would never share this information with anybody else. So you should treat your wallets exactly the same way. You should treat your seed phrases exactly the same way. My recommendation is to try and keep separate locations. If you are involved with different cryptocurrencies, there are different blockchains. You want to make sure that you are keeping the information for each of those wallets, each of those assets secure and in a place that they're accessible to you, but they are safe. Also want to make sure that there are multiple places for where you're keeping this, as if you lose the phrase and you lose your keys, you cannot retrieve it, and no one can rescue you. This is the idea of self-custody. If you feel comfortable with the technology, then you should absolutely custody your own assets. If you do not feel comfortable with the technology, this is one of the reasons that the ETFs have come into existence, because they provide an avenue by which one can purchase, hold cryptocurrencies, trade cryptocurrencies, etc., but be in a significantly safer environment. That you can also work through working with your financial professional whom you trust, whom you've developed a relationship with, and really provide that highway into the space that will be significantly more beneficial to you, much easier for you to understand. And also you can leverage the guidance of a person whom you already trust, and it's already done well by you. So when it comes to the devices that you are using and the software that you are using, please be very adamant. If you have any questions about are these devices secure, please do your research, seek out a professional, make sure that your devices are all up to date, that you're using latest firmware and software in all of your devices. Again, keeping your keys away from any sort of digital space is probably best. That would be my recommendation. Making sure that you're using multi-signature wallets for added security is also great. Ledger, as I mentioned, is a hardware wallet that is a physical hardware wallet. If you do purchase any of those hardware wallets, you want to make sure that you're purchasing them directly from the manufacturer, that you're not purchasing them from a third party. It's very, very important that you not do that. It's the fact that cryptocurrencies have come into existence. It's created an entire new space for cyber criminals to really want to target people who might not be as well versed in the security space or in the crypto space. So it's very, very important that that we understand what we're doing, and that proceed. I don't mean, I'm very careful when I'm doing these presentations, because I don't want to discourage anyone from having full custody of their own wallets. I think it's great. It gives you a great sense of independence. But there are other avenues now, which for a long time did not exist. The crypto space was new for a very long time. All we really had was exchanges, and the regulatory standards around exchanges were wobbly at best. And really seeing these new ETFs come into the space, I think is very beneficial for customers, for the everyday investor, and I think make people significantly more comfortable, given that all of us have investments in actual financial investments, with these different companies that can now allow a pathway for us to diversify a bit if one chooses to into the crypto space. So be very, very careful. Make sure you are very adamant about your keys. You're very adamant about your security practices. Do your research. Do not trust anyone with your keys. If they are not your keys, they're not your crypto. If you hand your keys to someone else, it could potentially not be their crypto. So please, if you have your keys and you're managing your own keys, be very adamant. Keep them in a safe. Use if they're written on paper, make sure that they're in a fireproof bag and a safe that can be protected, because once again, if you lose them, they'll be gone forever. Also, the idea that different blockchains for different cryptocurrencies are different. That's very important to note from a security standpoint, because the managing of your different assets can be very different. So you're not, for instance, sending Bitcoin to a Ethereum wallet, vice versa. You're not sending Ethereum to a Bitcoin wallet. So you want to make sure that you're staying consistent with that and understanding kind of how all of that works. Your wallet address is to a certain extent on public because it's on the blockchain, but there is really no ability, or very few abilities, to be able to identify who it is. So your wallet address, which you would share with someone if you are transacting, it's okay, but you want to make sure that that you are protecting your assets, and that you're being a good steward of kind of what you own.
Thank you so much, Carlos. We appreciate the safety and security recommendations. Per our estimate, actually, from the research I've seen, Bitcoin also, so although there's a 21 million hard cap on the tokens, based on what has already been lost, we're estimating there will never be more than 15 million in circulation, because there's a lot that people either lost their hard drive or forgot their seed phrases, and things like that keep happening. So, I think that other ways of getting on the train, from one of the slides that I mentioned earlier, are important to note, especially if you're not strong in understanding how to protect yourself from the risks that are associated with exchanges. We've heard of the FTX debacle that happened with Sam Bankman-Fried, was just sentenced to I don't know how many years in prison. These things happen in this space, and so being mindful of some of the exchanges risks, along with the hacking, if you're in the self-custody space trying to do it yourself, those things are real. So don't feel that if you're not able to get in through that closes your door to participate in this category. There's other ways that you can get on this train, and feel free to discuss with one of our advisors, and we would be happy to walk you through what might be good for you. So I'll dive into a couple of the questions here and see what we can attempt to address. Someone had a question about mining, crypto miners. We have exposure to some of them in our growth strategies in particular. And so for those who want to get in on that, depending again on your risk profile and goal, time horizon and such, we can definitely get you discussed with an advisor and figure out how to get you on the train if that is what you desire. How can we know? Yes, Sheikh Omar, you wanted to comment on that? Okay, sorry. Thought he was going to say something. All right, can we know about options for halal compounding? So we have different ways to invest your money in a way that is Sharia compliant. Our different strategies, as I mentioned earlier, our passive as well as value and growth strategies allow you to invest in this. We also have alternative asset options that people can consider, especially accredited investors. So there are different ways that we can help you achieve your financial goals in a halal manner. And feel free to discuss with an advisor, and we can connect and help you figure out what might work best for your situation. If someone has student debt as a student in college, how would they, advise them in terms of approaching cryptocurrency? Especially if they're still starting out, have low income, I would be very cautious. I would take the time to learn, because when you're young, nothing can be more valuable than the knowledge. Investing or seeing this as a hedge against currencies and store of value, these are all great. But more than that is, if you learn about different things that can help you as transition in life and grow, I think that would be valuable. But if you want to get on the train, there's different ways that you can. I would advise to take a very small portion of your portfolio, especially if you need that for college and your living expenses and other things. I would keep money aside for emergency purposes and all that. But if you are going to invest, I would highly advise against getting in on meme coins and other things that are especially highly shilled, as they call them, things that are highly promoted. Be careful. There's a lot of people paid, who are paid promoters of certain things. And if you find something that's being sold too heavily, be very careful. So I would say take your time to learn, and that's going to be a good way to get started in this space. How do we have access to our own keys? If you're storing in cold storage, for example, on a Ledger device or Trezor, among others, you can save the seed phrases, and that's how you can recover them. And Carlos covered some of those things as well. Feel free, there's a lot of research and information available on YouTube that you can look up. And if you need to reach out, you can always email info@shariaportfolio.com, and we can get you in touch, with one of our team members who can discuss further on this topic. What do we think about the Coinbase app? We do think that Coinbase is one of the more reputable applications and more platforms, we should say, for people who are looking to gain access to the cryptocurrency exchange space. Having said that, none of these are immune to future issues that may arise, right? We don't know what could happen down the line. Just like FTX was seen at its peak, to be one of the most reputable ones. Their platform was very, the trades and fills were very good, tight orders, and you would get amazing features there, but the system failed because of greed, and that's the underlying problem. So Coinbase currently has been used by a lot of the platforms. Even the ETFs use Coinbase to fill their orders. So I would say it's pretty safe, but I don't want to necessarily promote any platform that is out there, because of the fact that future concerns could arise. So do your own due diligence, keep your eyes open, because risks that are not apparent today may happen tomorrow. So we cannot say be resting, assuming things are going to be fine forever, because there's always a possibility that things could turn out to be a problem down the line. That's why you can use it to trade or buy, but storing on the exchange is another issue, and that's why it's recommended to store things externally. Or if you're not going down the self-custody and the exchange route to buy on your own, you can own this asset class through other ways that I mentioned on how to get on the train. So think about that, and hopefully that helps. Is Bitcoin mining halal? I will let Sheikh Umar answer that one, but I do think that it is. Again, I'll refrain from answering that. Maybe Sheikh Umar can provide guidance on that, as he's a scholar and can answer any halal questions here.
Yeah, no issue with Bitcoin mining.
All right, perfect. And how much of your portfolio do you plan to invest into crypto? That's a good question. Again, everyone's goals are going to be different. Everyone's risk tolerance is going to be different. Everyone's, stomach for volatility is going to be different, because although it's a store of value, it doesn't mean it's going to go, people are used to seeing things go up, and when they start to see volatility and, days where things are down, or even whole year where market can be down. We've seen that in the stock market, we've seen that in the bond market, and this is not immune to those types of things. So I think how much of an allocation will depend on your goals. Most experts will say not to allocate, I mean, to at least have maybe 1 or 2%, you know, to be on the train. But again, I think that if you are, you know, if you are mindful of the, you know, the benefits of being in this space and you're comfortable with this space, then, you know, a higher allocation could be something worth considering as well. So again, it all depends on each individual person's circumstance. Cadena, I think, is one of those governance tokens, if I'm not mistaken. And so we looked at, I think JP Morgan was probably behind that. The tokenomics were not looking very good on that. So I would be very cautious with some of these other tokens. Either it's a security or governance token. I'm not 100% sure at this point, but I remember at the time it was getting highly pumped out there. So I'm a little bit cautious with that one. We would have to look at it in more detail to make a more informed response about Cadena. But as I mentioned, crypto is 99% things that are very, you know, problematic. And so you want to be careful about where you participate. Any other questions before we wrap it up? I know we have taken over an hour with this topic, but I'm really grateful for those that have showed up and taken the opportunity to learn, hopefully taking away some pointers that can help you. I truly believe that this is a transformative time to be alive. We've seen the advancements happening in AI, really transforming a lot of things in the whole investment world, and you know, in the whole enterprise space. You know, AI has helped shape a lot of things that we're seeing and benefiting from. And I do believe that Bitcoin and crypto digital assets, select digital assets, I should say, are also transforming financial services, smart contract platforms, DeFi world. There's a lot happening there. So you know, it's very important for us to be mindful of the changes that are happening and identify ways that we could, you know, hopefully take advantage of that. The average expense ratio on some of them is 0.2, 0.3%. The one outlier is the GBTC. GBTC has been charging 1.5%, unfortunately. And if you look at the chart that I shared in one of my slides, that's the reason, one of the reasons I believe that they've been seeing a lot of outflows is because it just doesn't make sense that they would keep the costs so high when the other competitors are keeping their costs so low. So I do think they did make an announcement. They'll probably lower their fees as well, but 0.2, 0.3% is kind of where I'm seeing most of these ETFs charging. We do not have an office in New York, but we do have clients in over 26 states. You know, we do often visit there. We will be at the ICNA conference next month, and we do meet a lot of people from New York there. So hopefully, if you are stopping by the ICNA convention in Baltimore, you will hopefully get a chance to meet us there. But if there's an interest in any of your communities to do a halal investing seminar or to host a small group presentation, or if you want to do it on a webinar basis, you know, we have done many of these types of educational programs, and we would be happy to do that for you in your home state as well, or we can do it over Zoom. IBIT and FBTC, are they safe to invest in? These are some of the 11 ETFs that have been approved. I do believe IBIT and FBTC are a couple of the top ones that you may want to consider if you are considering getting on this train in the form of ETF exposure. There are other ways, as we mentioned, on how to participate, and feel free to talk to your advisor and we can determine what are some other ways to participate. Again, safe is relative. I do think that, you know, these are SEC regulated products, so you want to be, you know, they've definitely gone through a lot of due diligence in getting to the stage that they are at today. But there are risks in general with cryptocurrencies, and we've talked about some of them here, but currently those are options. Hopefully that answered that question. Are Muslim countries other than Pakistan that are buying or mining Bitcoin? Absolutely. I do think that there are Muslim countries that are doing that. They may not disclose that they are, I do believe that Kuwait, Qatar, among others, have been showing heavy interest in this. But likely, even Iran may be involved in some of that, but they may not be publicly stating that. So, it's possible out of, there will be something called game theory happening at some point where nation states, once they announce they're getting in, like El Salvador is one of the countries that is involved in mining Bitcoin. They use volcanic energy to mine. They also own Bitcoin and allow for a lot of transactions in Bitcoin. So that is a use case live that we are seeing of a country that has chosen to adopt Bitcoin as legal currency, and they're actually thriving. Their GDP is growing, their debt, rankings are improving, and their war and crimes are decreasing. So, there's a lot of benefits that come along with some of this stuff that we're talking about. But I do believe other countries, Muslim countries, are involved and will likely come on this space as we go forward. So I think we've answered all the questions that have come through so far. We will be available again if anyone has any questions to reach out to us. Provided a summary page here, that we can take away as we wrap up today. Bitcoin and digital assets can be invested in a Sharia compliant manner, or you can look at them as a store of value or a medium of exchange, as Sheikh Umar has mentioned, in his presentation. We do believe there is benefits in select tokens, and select is the key word there. When considering having them in your portfolio, do your due diligence before investing. Determining the right allocation will depend on your personal goals, right? As I mentioned earlier. And remember, if you do participate in this space, do it safely, do it responsibly, and make sure you keep your returns. There's greed sometimes where, things can go up significantly, but people may not choose to trim their allocation, right? Just like in your portfolio rebalancing, right? If you allocate a certain percentage to a specific category, if that goes up too high, it's only wise to bring that mix back to the right and desired allocation. So make sure to be mindful of that, especially as the bull market continues. And with that, we sincerely thank you for participating. Do you have anything else to add, Sheikh Umar, or any other comments as we close out?
No, just to echo your comments, I think we've been talking most of this time about Bitcoin, and you've emphasized this. I'm just going to emphasize it again, is most of the crypto market and the cryptocurrency market is flooded with a lot of pump and dump schemes, a lot of fraud, a lot of let's just call it junk out there, where you will quickly lose your money. And so if you're going to be using hard-earned money and investments that have yielded returns and be putting them into something, do it in a trusted asset class. And so, use something like Bitcoin or Ethereum. Trying to go too far beyond that, and you better be someone who's very advanced, really understands the technology, the implications. So just be very careful with the money, inshallah.
Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you all. Keep us in your du'as, and we look forward to serving you as we go forward. I hope everyone has a wonderful summer, and I look forward to connecting with you hopefully in our next webinar once again.